Oh, sorry. Good morning, guys. Welcome to today's session of Market Snapshot. It's a Friday, and we are looking at the events for the week and seeing how next week is going to go. So while you're checking in, just send a hi so that I can know that you can hear me. In the meantime, let's prepare for next week's session. So just a brief hi on the chat section while I prepare the notes for today. Just a minute. Okay. Okay, thanks guys. Martin Maina is saying, why is UX index got expired on your platform? Okay, before we start, there are two types of contracts for that EGM Securities or FX Pesa offers. The first one is a rolling futures contract, and the other one is a contract that expires. So you have to go through your market watch and make sure you're trading the rolling contract if you don't want it to expire, because the futures contracts usually have dates where they expire. So let me just show you that. So you need to be careful with what contract you are trading. This is US index. Let's see. US index. So I'll look that up for you, Martin, and then get back to you during the session. But make sure you have either the rolling contract that doesn't expire, or if it's expiring, take note of the dates. Okay. So they always, and if it expires, there's always a new contract that's being starting to trade. So you'll always have the notification and the information next to the ticker or the asset you're trading. Okay, so let's just go briefly to what happened this week, and then we see how that translated in the chart. So there's a lot that has happened, and it's good to just break it down, get the feel and the mood of the market, and then from there, let's see what to expect next week. Okay, so we'll also talk about gold. So Monday started out fairly quiet. There was nothing much going on in the markets apart from the federal budget, this budget balance. We also found out that the Treasury is running a deficit. The US Treasury, not a deficit per se, but they were exhausting their cash reserves, and guys are speculating that they might need to issue more bonds so that they fill up their cash reserves, meaning that they might have to soak up dollars from the market, and that might make dollars scarce. So it was just an idea floating around. I'm not sure if it translated well in the market, but it did keep things fairly stable for Monday. And then moving on to Tuesday, early in the morning, we had the claimant count change from the UK, but the main event, of course, was the CPI release. So the core CPI and the CPI, which came in lower than expected. Yeah. So we know that if the CPI reading comes in lower than expected, what the dollar is supposed to weaken, because you expect that the Fed is going to hold, or it's going to reduce or start reducing interest rates. But that wasn't the case. If we looked at the chart, there's quite some interesting reactions in the market. Okay, so let's just have a look at the chart. This was Monday over here, and I'm using gold as a reference for my dollar analysis. So this was Monday, fairly quiet. And then Tuesday, what happened is the CPI came in weaker, but we did have this drop in the market over here. So when you're coming close to major news releases like interest rates decision, usually the Fed has already decided on what to do based on the trend of data. And if you see that CPI is not having a huge impact on the market, it's because the market already has determined or anticipated what the Fed is likely going to do. And one data point wasn't really going to affect the next day's meeting in the Fed with the FOMC, and that's why we didn't see we didn't have a reaction that we expected, because many people I know are expecting that because CPI is coming weak, then the dollar should be weaker and we should have had a bull trend. But that wasn't the case yet again, because FOMC was the next day, and this was the main event of the week. So we'll talk about FOMC, which was the following day. So FOMC came in. Let's go back to this calendar. So these are things you need to learn when you are doing analysis, especially fundamental analysis. Is the data point or is the news point important for that specific time? So CPI is important, yes, but for this week, the main event was interest rates and not necessarily CPI. So the market wanted to gauge and know what is the Fed likely going to do next. And since it was the following day, I don't think having a reading the previous day was going to affect it dramatically, or their opinions dramatically. And that's what we had with the Fed. Now, FOMC was also quite interesting. Again, here we were expecting, because they are holding, remember they held interest rates, and this indeed was reflecting in the market. Everyone was expecting that they're going to hold, the dollar is going to come weaker than expected, and that was reflecting in the market, because for the better part of the day, what happened? We had gold trending upwards. So let me go back to this chart. We had gold trending upwards. So we had this section over here for the better part of that FOMC day, because the news came in at 9. So the better part of the day, we had an upwards trend, because the market was expecting that they're going to hold and they're going to be a bit dovish, a bit light. Their sentiments are going to be towards holding rates and just cooling off. But they did, again, this is what they usually do. They send mixed signals. So on the one hand, they did hold interest rates, but then if you look at this calendar here, so let me go back to this calendar. If you look at this calendar, what was the most important thing? And I usually tell guys, the market runs on expectations, not on what the Fed is doing. And one thing that came out clearly is they really stressed out during the press conference the possibility of them hiking again. So in as much as they held, they stressed out the possibility of them hiking again. And this, of course, led to the dollar strengthening again. And that's why we saw that on Wednesday. So let me go back to this chart. On Wednesday, from around 9, is it 9 or 10 during the press conference? So let me see, this is, yeah, from around 9, we did have the dollar strengthening and gold weakening. So we had this move all along until the following day on Thursday. So that's something to know. Expectations changed. And when expectations changed, then the dollar became strong. Yeah. But then when the reason I look at gold and dollar only instead of euro and dollar for such types of analysis is because you also need to take note, especially if you're using a currency versus another currency, you also need to take note of what the monetary policies expectations for that other country are. And this is where we had quite a big divergence from how gold was moving and how euro USD was moving. And this did indeed reflect, especially towards the midpoint of yesterday, where we had this push upwards, signifying that the dollar was finally weakening. So despite hawkish rhetoric from the Fed that they might raise again, the dollar didn't become strong towards the end of yesterday. And that was because of the ECB meeting we had. So again, it's good to follow these stories and you know why the market is behaving the way it is. Gives you a good feel of the bigger picture. And then from there, if you're trend trading, you know what to do next. So Thursday afternoon, main referencing rate for ECB came in, which is this one. But then during the monetary policy press conference, they stressed that inflation could be higher. So this tells you that they might have room to keep on increasing interest rates. And this is what the market has been sort of putting their money on. The fact that the Fed might stop earlier than the ECB. That means when the Fed stops raising interest rates completely, ECB might still be raising interest rates. And that's an interest rate differential where Euro might be gaining more, might continue gaining as long as the ECB is led to cutting rates. I don't know if that point is clear, but just to simplify it, the Fed is more likely going to stop raising interest rates first and then ECB. That means ECB is going to keep interest rates higher for longer. And that means we are likely going to see a stronger euro than a stronger dollar for longer. And that explains the difference between this chart for XAU and this chart for Euro USD. So you can see the market is already betting on the fact that we might see the ECB hold rates for longer. And that's why we didn't even have, let me just put it at H1. We didn't even have Euro budging when CPI came in, sorry, when from the hawkish rhetoric of the Fed on Wednesday. That's why you have this uptrend. So once you use fundamentals to explain your uptrend or your trends, it's easier for you to trade with the trend for those who are doing technicals. So in this case, I know that unless something structural, fundamental changes in the market, my bias in this chart is we're in a bullish trend. And so I'll be looking for buys in this chart. That means when you're using your technicals, now you can come to the lower time frames and see where are buying opportunities located. So if you do that, then we can see that first we had this break in structure over here. So so this is an uptrend in Euro USD. We had this break in structure, and then at the moment the market is supporting itself over here with this long-term resistance that are standing to support. However, I'll be interested in knowing what happens if we come back to this level here, because this looks like a point where a lot of buying happened. So if I get a good discount, this will be an optimal place to see if any demand will come back to the market. That means we're going to likely see a very strong push if the market comes to this, and if the conditions stay the same in the market. That is, if the sentiment is ECB and also Bank of England is going to keep rates higher for longer than the Fed. So if I look at this, for technical analysis, traders will be looking for discounts. So a discount is when price falls back at least 50% or below than 50%. So let me just put a fib tool on this move here. So if this price retraces anything below 50%, then we say that price is in a discount. And that means this is your 50% level. So let me just edit this. Just a minute, let me edit this fib. Properties. Oh, okay. Sorry guys. Sorry about that. I'm supposed to be on screen too. Okay. Are we all here? Can you see the screen? Can you see the screen, guys? Yeah, I think now we can see the screen. Sorry about that. Okay, so let me just get back a bit. Okay, so we started by explaining what is happening with gold and the dollar. We said that we had this push downwards because the Fed came in hawkish during the meeting. And because the Fed came in hawkish, that means they were saying things like we might still raise interest rates. And the fact that they might still raise interest rates means there is room for the dollar to be stronger. Yeah. However, if you look at the chart for gold, we were basically in a downtrend before the ECB meeting, that is. We are basically in a downtrend like that. We're in a downwards channel. But if you look at the chart for Euro USD, we've just been in an uptrend this entire time. So I was trying to explain what the divergence or what is causing this divergence, because usually most of these assets are just correlated and they trade against the dollar. But because you had an uptrend in a downwards channel in gold and an upwards trend in Euro USD, then there was some sort of mismatch with the dollar activity for that period. And that's why I was saying, if we go through analysis between different currencies, you have to take note of the fact that the other countries also have monetary policy expectations to implement. So in as much as we were expecting a stronger dollar, the market was also expecting a significantly stronger euro. Why? Because inflation, as they said in yesterday's meeting, which caused this up move, they stressed that inflation is still high. And it looks like inflation might be persistent in the Eurozone for a longer period than in the US. That means the ECB is likely going to maintain high interest rates for longer than in the US. So if one country is offering higher interest rates and the other one will start reducing interest rates, the market or traders or investors will already trade as though that's the reality. And hence why I say the market moves with expectations. That means we had the euro basically forming an uptrend because you expect the euro to be stronger than the dollar in the long run. And that's why there's a difference in how gold was trending and how the euro was trending. Up to there, I hope you're clear. So coming onto this chart, now that we've established the thesis for our uptrend using fundamentals, we can get to the technicals and see what are the likely technical plays that you can take advantage of. On the longer time frame, we have this extremely bullish move that has happened for the past week from Euro USD, based off of that explanation, what I've just talked about. However, with your technicals, you know it's not good to chase prices, and traders might be interested in finding out what are the discounts that will be ideal for me to get into this trend. And that's why we are talking about discounts and premiums. And I drew a fib on this most recent. So this is our most recent impulse move higher. So the question is, where will be the most ideal entry areas for traders who are looking to take advantage of this upwards trend? And hence I drew a Fibonacci tool like that. And I'm going to simplify this. The level. So let me remove this, and this. Okay. I usually like to keep the Fib tool very simple. Anything above 50, price is trading at a premium. Anything below 50, price is trading at a discount. There's a high likelihood that more buyers would want to enter long when the euro is trading at a discount, and that is below our 50% retracement level. That means a good area for a lot of buyers looking to go long would probably be below this 50% area, and I drew a supply zone on the 1 hour here. So this is an optimal area for a lot of guys who are looking to get in long. But what's the likelihood of us coming all the way down here, considering the very strong bullish sentiment? That's one thing you need extra technicals to work on. But yeah, it's overall, chances are you're likely going to see a bullish trend for the better part of next week, in as much as there's a probability of having a retracement at the moment. I hope that's clear with Euro USD and why we are considering more likely a bullish scenario. For a bearish scenario, I'd say that will be a short-term trade, and you'll probably want to go to a very low time frame if you want to trade, if you're bearish on Euro USD, and that means looking at your market structure and more specifically seeing what happens after we break structure. Are we going to have confirmation that the structure is going lower? But if you're bearish, it's good to keep it short term because the long-term sentiment of the market, as per what has happened this week, is still bullish. And then finally, let's go to GU, which is a pound. So we have news on pound next week, and that brings us to what we should expect next week. Before I get to this policy rate meeting over here. So let me go to next week's calendar first. Just a minute. So I want to switch the charts now. Okay, so you can see my calendar. Yeah? Okay, so next week is fairly quiet, and that's a good thing. If you're trend trading, you don't want any major fundamental news to affect the direction of the trend. So this year, it's probably the main event for GU for next week, GBP USD. Now, the market, if you look at Bloomberg today morning, the expectations are the same. They expect the Bank of England to be as hawkish as the ECB was. Yeah, the market runs on expectations. And that means we expect there's a higher likelihood of a strong pound for the better part of today and next week, way up to Thursday, unless something happens in between, some major news happens. So how does that translate to our chart? Let me share the chart again. Yeah, so getting back to our chart, if we try and pick up that, market usually, again, market runs on expectations. I'll keep on emphasizing that. We see that it's already reflecting with this uptrend we've been having for days. So we broke a major resistance point. So let me just clear this chart and then we can start on it. Okay. So GU and EU are looking very similar in terms of the direction of the market. And on the daily chart, we broke this major level over here. Yeah, and the market seems to be very certain that next week we're going to have a hawkish Bank of England. That means interest rates they're going to emphasize that they might raise interest rates and talk about how inflation is still very high and things like that. And that is going to support the pound going higher for the better part of next week. That means going to your technicals, you broke this recent high, the daily high here, and we're now heading for new highs. Yeah, that means if you're a technical trader, your bias at the moment should probably be just trade with the trend. That means follow the trend. However, do we have room for short-term plays? The answer is yeah. There's a chance we can have a short-term sell, mainly because this was a very impulsive move over here. So I wouldn't be surprised to see GU coming back to this level. Mind you, that will mean it's retracing on the larger time frame. Over here, we had that previous high. So yeah, so I wouldn't be surprised GU coming back down here or down here, just for the retracement before we head higher. However, it doesn't necessarily mean that it has to come down. Remember, the sentiment is still bullish. Okay, so that's so we've covered gold. So now for gold, let me just give a backdrop, a technical backdrop. This is what has been happening on the daily chart. You can see that there's this trend line. We failed to break it yesterday. So let me just clean this. We failed to break it yesterday, and it seems as though dollar weakness is being supported. Oh, yeah, I'm on the chart. Yeah, so this is gold. I hope everyone can see the chart. for gold. Someone is saying, hi Brenda. Someone is saying you're not showing the chart. Can everyone see my chart? Okay, I hope everyone is seeing my chart. Okay, so remember the strength of the dollar is mainly impacted by euro and Japanese yen. Those are the most traded currencies. So that is also going to be pivotal in determining how strong the dollar is going to be or how weak the dollar is going to be. And since we're looking very bullish here, despite the fact that we might have a short-term pullback, the same thing can be said here. We might see dollar weakness in the long term. Yeah. So there is a very low likelihood that if we are to break this trend line, there's a very low likelihood of us going this low in the market for the better part of next week. Because again, of the reasons we've just aired out, in terms of, yes, the Fed is hawkish, but okay, it showed some hawkish sentiment, but that's also true for the ECB and the BOE. That means it might factor into the weakness of the dollar in the long run. Okay. Again, so in the event we do break lower, then I'll probably be targeting this section over here. In the event we break lower, which is there's still a likelihood, because the market's the market at the end of the day. There's still a likelihood of us breaking lower, probably to this supply zone, because there's a very huge imbalance over here with this push. The market gapped. Yeah. So if at all we go lower, that will be a target. But the more likely scenario is we might see an uptrend. I'd be interested to know what it will do as it approaches these previous highs over here. Okay. Now let's talk about something else. I'm supposed to keep this brief. So let me go back to the calendar and see what else we have. So just a minute. So this is a wrap up for the week. It's supposed to give you a feel of what has happened this week and what we should expect next week. So I was even waiting for this news from Japan. Okay. So Japan has decided to maintain its rate as is. Let's see what they've said, because I've not had a chance. Yeah. Okay. So sometimes it's good to read the articles themselves, see what people are saying, see what the comments are, and things like that. And that's going to help you establish the long-term trend in the market. So this one is saying uncertainty is extremely high. Okay. Let's see what the BOJ, the governor, has said, or any sentiments from here. So just a minute. Okay. So it seems as though I have a problem with clicking this. So let's just, yeah, it's better. Yeah, so obviously things like this, inflation views. Inflation is what is the major concern for the market. But for Japan, again, it's managing their debt. Remember, the debt to GDP ratio of Japan is very high. So sometimes they're likely going to make sure they're giving people negative rates, because if you have like a 200% debt to GDP ratio, then you'd want it to be cheap. You'd want to pay very low amounts for that debt you're having. So that's one thing that Japan has been struggling with, and it usually affects the monetary policy. Because remember, in Japan, they use yield curve control instead of the normal monetary policy, which is a slight variation of what the other countries use. But yeah, so their focus is mainly on managing their debt. And it seems as though chances are they're going to maintain they're going to maintain their rates for a longer period. I'll get more information on what the outlook is. Remember, a lot of central banks stopped forward guidance. Forward guidance is them saying we're going to do this and this next. And instead they adopted this data-based approach that we're going to see what the data is saying before we make a decision. So it's making things a bit difficult to, with regards in what are the central banks going to do next. Having said that though, let's look at what the market reaction is, because it seems as though guys are interpreting this as a case for a weaker Japanese yen, and that should tell you something about the dollar. Considering if so, this is our trend for Japan, USD JPY. One interesting thing to point out is this has reacted well to the Fed comments and views more than Euro USD and GBP USD. So here we had Euro USD defying the dollar strength, the temporary dollar strength, and going higher. GU doing the same, but when it came to USD JPY, it just went along with the dollar strength and it became weaker against the dollar. That can give you a strong case for even a higher upside with this. So on the daily chart, we saw that it's broken a new high. And it seems what is happening with monetary policy is these guys are likely going to maintain negative 0.1% interest rates for some time. And that means we might see I think this is one of the few currencies where the dollar, with the major economies, that is, this is one of the few currencies where the dollar is still strong against it. Because we've seen the case for euro, we've seen the case for pound, and that's not the case. That's not the picture. So in this case, if we expect more weakness in Japanese yen, then I'll target this point over here. This is on the daily, but remember to start your analysis on the daily. If you can, try as much as possible to explain or to relate what's happening with the trend with what is happening in the news. That gives you more confidence with your technical analysis. Now that I know, chances are we might see a weaker Japanese yen. What am I going to do about it? First, there's this move that has happened on the H4, where we had this uptrend, and then the market pulling back. And we did see, let me put this, we did see it dipping entirely into this zone here. So this was the last point the market sold initially. Then we had this break higher. So the market dipped back into this and then shot up. So I'll expect, if I'm trading higher, another dip maybe here for me to, I'm always looking for discounts, which is also a good way to trade, because you need a high risk reward ratio where you're risking very little for a big amount of profits. In that case, I'll probably be looking for a dip first, because usually the first reaction is the market isn't very, okay. Usually the first reaction, it's usually based on stop losses being hit, and the market is very chaotic. So you'd want to wait for a more reliable formation or a more reliable case for an uptrend in this one. That means I'll probably be waiting for the market to either come here or here with this initial downwards trend. Okay, so that's it for today's session. We've taken a bit longer than expected. Next time we'll have it a bit short, straight to the point, and we'll cover more assets. In the meantime, it's good to know the general picture and what we expect next week. So just to wrap things up, we expect the trend in the euro and the pound to continue, because you expect the ECB and BOE to maintain higher rates for longer than the Fed. However, that might not be the case for gold, because again, gold is not a country, so it might react accordingly or depending on the sentiment in the market. And then we've said for the yen, chances are the market might not expect any increases in interest rates, and that might give a good case for a weaker Japanese yen going forward. So with these major currencies, pound, euro, and yen, it's only the yen that's weaker than the dollar at the moment. So that can give you a good case of why you should be bullish in this uptrend. Having said that, are there any other markets we need to look at? USD CAD. So let's have a look at USD CAD, just a minute. Let me check the USD CAD chart. Okay. Okay. So for Canadian dollar, let's see what's happening here. Okay. Okay, so let's look at the daily trend. So we have Canadian dollar coming to these lows. So if you're analyzing using the daily chart and you've come to the low of the chart, you can just go to a higher time frame so that you have a better picture of what is happening. So here again, USD CAD seems to be weakening. Sorry, the dollar seems to be weakening against the Canadian, and this is probably translating across the board. So apart from Japanese yen, most major currencies, I think the trend is the same, and the theme is the same, that is a weaker dollar. And we've explained why we think the dollar is going to be weak for the better part of the week. So coming to the daily, okay, from the weekly, we can see that we have this formation over here. Let me just put it like that. That means they are weaker and weaker buyers as time goes by. So every time buyers have attempted to go high, they've pushed it lower than this initial point here. So it means buyers are being weaker and weaker as time goes by. Having said that, I'll have a very good case. I'll have a very good bearish case, if at all, and this is a very long-term position, if at all I see prices coming back here within this, the upper side of the triangle formation, there's a very low likelihood of that. So let's go to a lower time frame and see if you have any closer points of reversal that we can, potential points of reversal to enter. Another point is here. This was the previous 4-hour low, previous 4-hour support that became, that was broken here. So this is another point. And especially because we have this imbalance over here, then I can be curious to know what happens when the market gets here. Again, always looking for discounts, gives you better risk rewards ratios. So that's for USD CAD, meaning if I go to a H1 or a lower time frame, I'll probably want to be patient till I see it coming back here. Otherwise, the bias is still bearish. DXY, for now, just look at Euro USD and then invert it, because DXY is mainly just Euro USD. Okay, so I think that's enough for the day. We'll be doing these sessions now from Monday to Friday. They used to be from Monday to Thursday. And for the Friday session, we'll have a recap of what has happened and what to expect next week. We've already talked about what to expect next week. And the other major news for today is the final CPI for Euro, although they've already talked about what they're going to do. So I don't think it's going to have a big impact on the market. Having said that, enjoy your trading day and see you in the next session. And all the best with your trading.